And what did Bloomberg actually say? They just focused on that and didn't explain, go through the whole process like you did for me, right?
Correct. They just said that the Chinese government is pulling back tax exemption, and therefore, the costs on consumers are going to go higher. Therefore, consumers in China are going to buy less gold.
Yeah, it's
So,
rubbish.
so all wrong, right? All three
Yeah,
of them.
Monaco 64, home of alternative economics and contrarian views. Well, today I have our good friend Eric Young, aka at King Kong 933. I recommend you follow him on X. He's very active there, and he covers gold, silver, and geopolitics and many other things. He's a regular guest. Welcome back, Eric.
Thanks, Mario, for having me back again.
You're welcome. It's always great to speak with you, Eric. And I wanted to speak with you today about the recent news that came out on the weekend of November 1st about the Chinese government imposing VAT uh, on gold. And there's a lot of misinformation in the West and even in China, as you told me earlier before we started. And the misinformation in the West is coming from sources like Bloomberg and other mainstream media, and they're trying to say, well, China, the Chinese are going to stop buying gold. They've imposed VAT, sell gold, and you tell me as well that there are some bad actors in China involved in the gold market, and they're spreading misinformation. So I couldn't think of a better person than you to explain to us what's really going on. So I'll let you, yeah, I'll let you talk now.
So I'm just going to make it simple for your audience because the process is complicated. Okay? Like, how the VAT system works for gold in China. Now, I'm just going to start off with telling the audience how it worked in the past. So, how it worked in the past is that if you bought what they call standard investment gold bars from a Chinese commercial bank, which like these banks are all state owned. So the Chinese government own these banks partially, right? And if you buy these things called standard investment gold bars from the banks, you are VAT exempt. You don't pay any VAT, zero. And if you buy these things called commemorative gold bars, which are the pretty designed Lunar New Year, etc., you know what I'm talking about, Mario. Like the pretty gold bars, you have to pay VAT. So, like, that's the difference of the different tax categories for different gold bars at the Chinese commercial banks in the past. Now, if you buy gold jewelry, you're charged 13% VAT across the board. Doesn't matter where you buy it. But the 13% VAT is embedded in the gold jewelry price. So people you like when you see an invoice, you don't see the VAT because it's embedded, okay, in the piece of gold jewelry price. And what happens is that whoever is selling you that piece of gold jewelry, the jewelry shop, they are supposed to report the sales to the Chinese government and remit the 13% within that sales price as the VAT, price that they charged you to the Chinese government, minus what they call a input VAT. So because when they bought the source gold, that gold also was charged a 13% VAT, right? So they get tax credit for that through what they call a special VAT invoice, which is for short form is SVI. Okay. So that's how they did it in the past. And as you can see, the problem with that system is that the gold jewelry shops, I guess a lot of them, would cheat the Chinese government out of that VAT payment. They just simply won't remit that VAT. So they pocket that money. That's what they did. A lot of them. And a lot of them also bought gold that is not from the SGE, like recycled gold. And although, recycled gold, you buy it, you're supposed to, charge VAT, like I just said. They might, again, number one, they might charge the VAT, pocket it, or they might simply don't charge the VAT and, go into this price war with the legitimate gold jewelry stores. So, Mario, do you have any questions so far? Because I'm just talking about how they did it in the past.
No, it's clear. It just looks like there's a lot of jewelers out there who are basically cheating the Chinese government, and some that weren't, and that created a problem. So I guess what has the Chinese government done exactly to stop that, and why are people like Bloomberg saying that it's going to be bad for gold, and why are they wrong, Eric?
Okay. So before we go to the new system, I just want to say one last thing. The Chinese jewelry stores, a lot of them, like we were talking off camera, and you asked me a question. You said, are these Chinese jewelry stores, are some of them also bullion dealers? And I said, yes, they are. So what they do is they would, sometimes they are the recyclers. They buy back old jewelry and they melt the gold and they remint it into new bars and they sell those, gold bars. And again, they don't collect VAT. So, or they do collect VAT in some cases, I'm sure, and they pocket it, right? But most of the time, for those gold bars, they don't collect VAT, which they're supposed to, because those are not, official gold bars from the SGE. Anyway, so the new system in place is as such. The only place, Mario, in the new system that anybody can get VAT exemption is at the SGE and SHFE. SHFE is the Shanghai Futures Exchange, but we're not going to go there because they don't like not a lot of these gold jewelers or bullion dealers or individuals have accounts at the SHFE to take delivery of physical gold. The physical market in China is mostly at the SGE, the Shanghai Gold Exchange. So we're going to focus on that. So, like I said, the only place in China after November 1st, 2005, where you can get VAT exemption is or physical gold is at the Shanghai Gold Exchange, SGE. Now, let's say you're a member of the SGE, and there are three types of members. Let me define that at this point, okay? You have, or actually, there are more than three kinds, but I'm going to focus on the three major categories so that we can focus on our discussion here, okay? So the top tier are the bullion banks, are the Chinese banks, commercial banks, Chinese commercial banks that are state-owned, like ICBC, the Industrial Commercial Bank of China, and Bank of China, BOC, amongst others. And then the second tier, and also the first tier, you have the big jewelry manufacturers and retail chains. Okay, they're also first tier. Second tier, you have people like the CTAs, the commodity trading advisors, who have their own firms, okay, to trade gold and silver at the SGE. And then the lowest tier are individuals, like guys like me and you, Mario. If we want to open an account and trade at the SGE. So what happens let's say if you want to buy and sell physical gold at the SGE, if you buy and sell physical gold at the SGE and you don't take delivery, it's VAT exempt. Okay, so that's like within the SGE system, the physical gold is there because the SGE backs up each contract with an equal amount of physical gold. So it's one-to-one backing at the SGE. Okay, for gold. There's no rehypothecation. So if you buy gold at the SGE and you leave the gold at the SGE vaults, you get full VAT exemption, just like before. Nothing changed. If you, let's say, want to withdraw the physical gold, as now let's talk about the Chinese commercial banks. They are the ones, let's say, they're the ones withdrawing the physical gold for investment purposes. Then they are VAT exempt, just like before. And theoretically, they because of the special status that the Chinese commercial banks have, they can take those SGE physical gold and sell it to their customers, VAT exempt, just like before. But in terms of reminting that SGE gold into smaller gold bars and selling it, right now, that situation is not clear. Okay? We're going to wait until the smoke clears and we'll know more. If the Chinese commercial banks can remint those bigger SGE bars and sell them like before, VAT exempt. So now we're done with the Chinese commercial banks. All right. So that, like, right there, Mario, that already dispelled the myth. Is um, now Chinese citizens cannot enjoy VAT exemption for their physical gold like before.
Yeah, that's
Okay,
clear.
because they
That's
because they
clear.
can because they
Yeah.
can right because they can through the Chinese commercial banks gold accumulate program. Okay, now let's say you are an individual, but you're a member at the SGE, your lowest member, lowest tier member, and you want to withdraw physical gold via your CTA. Okay, because you have a rep there who do the withdrawal for you, and or sorry, you don't use the rep, you are directly withdrawing, but you open an account with the CTA. That's how it works. Now, a CTA in China has demonstrated today, November the 3rd, okay, that as a lowest tier member at the SGE, you can buy physical gold directly at the SGE, like the standard investment gold bars, okay? The 1 kilogram, the 3 kilogram, and the 100 grams SGE standard investment gold bars. You can, as a lowest tier member, you can directly buy that from the SGE and you can take delivery without paying VAT. So VAT exempt. So again, that dispels, disproves what Bloomberg said. You, you're VAT exempt, you're individual. You're just a Chinese citizen with an account at the Shanghai Gold Exchange, and you can buy standard investment gold bars from the Shanghai Gold Exchange, VAT exempt. Okay? So we're done there. Now, let's say you're a jewelry manufacturer and retailer. What happens? And you're a, lower tier or a high tier, like tier one jewelry manufacturer or jewelry retailer, and you want to buy physical gold from the SG. Now, Mario, before this new rule on November the 1st, there is a 13% VAT withholding tax. Okay, if those guys bought the gold from the SGE, so they needed to pay whatever that gold price is listed at for that SGE contract plus 13% in the past before the new rules. And then, of course, like explained earlier in this program, they get a SBI, which is the special VAT invoice, and then they can offset. They can get this money back, this VAT, when they offset the final sales to the consumer, right? What happens now? Now, after the new rules, Mario, the gold jewelry retailer or manufacturer, okay, they get they get a 6% withholding VAT. Okay, so instead of submitting or paying 13% right off the back, they only pay 6%. So it's a 7% decrease. So they pay less in withholding tax. So how is that negative? Like what Bloomberg is saying. It doesn't like I can't even so anyway, it's not negative because they're paying less. They have less capital cost right off the back, and they get that 6% VAT back when they do the final sales. Okay? When they offset the final sales invoice with the SVI, when they do the final VAT submission. So I just explained, how the investment gold, standard investment gold, non-investment gold will work. As we can see, nothing really not a lot changed for the end consumer, for the Chinese consumer, right, Mario? Because they can buy VAT exempt gold if they want to, like I explained, or they can, buy jewelry like before and pay the 13% embedded in the jewelry, in the gold jewelry, like before. No change. So why are the Chinese gold jewelry companies, some of them, some of these bad apples, bad actors, like you call them, why are they complaining? Well, like I said, because they bought a lot of recycled gold in the past that they did not declare to the Chinese government. And they also bought investment gold in the past, like through traders from the SGE that were VAT exempt. And then they melted that gold to make jewelry. So that's, gray area borderline, I guess, is illegal, right? You're not supposed to do that, but they did it. So this all these new rules that the Chinese government implemented on November 1st for the gold tax, in China, is really affecting these gold jewelry companies that are pocketing the VAT or not reporting the VAT, or these gold jewelry companies selling gold bars. Because like I said, like I explained just earlier, under the new rules, only the gold bars that you buy from the Chinese commercial banks in standard investment gold bars or directly from the SGE VAT exempt.
I see. So that's
Yeah,
basically the gist of the new rules is
correct.
it depends on the bars that these jewelers buy. And what did Bloomberg actually say? They just focused on that and didn't explain go through the whole process like you did for me, right?
Correct. They just said that the Chinese government is pulling back tax exemption, and therefore, the costs on consumers are going to go higher. Therefore, consumers in China are going to buy less gold.
Yeah, it's
So,
rubbish.
so all wrong, right? All three
Yeah,
of them are wrong,
yeah,
right? So
yeah.
like, anyway, I got this pretty well, like this process pretty well handled because I am speaking to actual Chinese SGE CTAs who are involved in this process. Okay, like I said, the only um, the only part of this entire new system that we are unsure of is whether or not the Chinese commercial banks can sell remelted or reminted standard investment gold bars. So we don't know that until later on in the week when the Chinese commercial banks make an announcement and start taking orders again. Okay, for those gold bars. But in my personal opinion, I think they will continue that practice because you know why, Mario? I showed you a video of like what the standard investment gold bars from the Chinese commercial banks look like. They are wrapped in plastic with a certificate, and each bar has a unique serial number. So that's, in my opinion, is within the SGE system. You see, because the Chinese commercial banks are simply, in my opinion, SGE proxies, okay, in this gold market, so to speak. So, what the Chinese government, in my opinion, is trying to do is to take all the OTC um, physical gold sources, okay, and funnel all that to the SGE. So, like I said, in the past, because of because the gray area is so big, a lot of gold jewelers they bought their gold not from the SGE, from the recyclers or from OTC, which is over the counter, maybe through domestic refineries, right? So they bypass the SGE. But in the future, all this gold buying is going to be through the SGE because, like I said in the beginning of this program, only the SGE will have VAT exemption for anybody, right? Okay, so your gold has to originate from the SGE in order for you to get VAT exemption. And by the way, Mario, once the gold leaves the SGE, unless you're the Chinese commercial banks, okay? If you're not the Chinese commercial banks, once they leave the SGE, and of course, if you're a member, you get that VAT exemption, like I explained. But once you hold it and you try to resell that gold, you have to charge SGE, VAT, sorry, VAT to whoever your customer is.
Yeah, it makes sense. And Eric,
Yes.
you also said that contrary to what Bloomberg and others in the West have been reporting, that this will actually increase demand for physical gold in China. Could you explain to us why you think so? Is that because the system, I guess the consumers are probably going to concentrate more on getting the VAT exempt instead of buying gold as jewelry?
Well, I think the gold jewelry part, Mario is not going to stop because, like I explained, what's the difference? There's no difference. You pay 13% embedded VAT in the past, and you're paying 13% embedded VAT now. So
Yeah.
there's no difference, right? In terms of investment gold, what's going to do there is going to, like I said, it's going to funnel all the demand through the SGE pathway, okay? Because only through the SGE, like I said, can you get VAT exemption. Now, before you ask me that question, I was going to say this. Let's say you're a SGE member, you withdrawn the physical gold and you want to sell it, but you don't want to pay VAT. What do? You sell it back through the SGE. You see? You see what I mean? Right? Because as we all know, we discussed this, Mario. Good delivery gold is always good delivery gold. As long as you don't like smack on it, change its dimensions or change its purity, that good delivery gold bar is always good delivery gold bar. Doesn't matter if you take it out of the exchange. Okay?
So it's actually
So
going
they
to
would
grow the SGE market because
absolutely,
yeah,
absolutely, and that's a good thing, Mario, because in the past, the SGE um, only had 60% approximately. These are proprietary numbers, by the way, okay, shared to me by CTAs in China. So SGE had around 60% of the trading volume in China. And the other 40%, 30 to 40 is through, OTC and the retail gold market in China. Like I'm talking about the gold jewelry markets in Shenzhen, Sheibei, okay? Stuff like that. What these people are anticipating is that after the rule change, the 60% is good of the SGE market share is going to grow to 80%, Mario. So what that means, and also another effect from these new rules is that you probably guessed this already. The SGE gold price is going to be the lowest price, right? Because everybody else have to pay VAT except at the SGE. So you won't have a situation where, like in the past, you have recycling gold and you have this and that, and that gold was cheaper than the SGE gold. But in the future, or right now, SGE gold is going to be the cheapest in China. So when the SGE have a premium price in the future, compared to the Western gold price, okay, that will actually pull more gold from Western exchanges to the SGE to China versus before because the trading volume went up 20%. Do you understand what I'm saying? Right?
Yeah,
So
yeah,
they were
that's right.
60 before, you're 80, and you're the cheapest in China, right? And you have more volume. So what's happening? Let's say at the LBM, I'm just going to use LBMA as an example, right? In the past, you have the SG primarily, let's say, buying gold from the LBMA, and you bought, let's say, 1,400 metric tons from the LBMA of gold. Now, to the rule change, you're buying 2,000 metric tons because all the other OTC, you know, imports that happened in the past, it's not going to happen anymore because they don't get VAT exemption. They have to go through the SGE. So, in my opinion, China, what they're doing is they are focusing on building up the SGE as their benchmark for the domestic gold market. Okay. And they are concentrating all the firepower through the SGE to project to the West. That is what's happening.
And I mean, that's going to lead to more and more gold flowing out of COMEX and LBMA to China. And it's crazy that this is happening. Is this happening? Is this going to happen to silver as well, or is it already happening, Eric?
Well, silver is a different animal, Mario. Silver, like I explained in the past, China really, they're indifferent on the silver price. They just want, like, their prime objective for silver is that they want as much cheap silver and ample supply, by the way, okay, of
Yeah.
silver as possible to support their industries, right? And military industrial complex. Because you need silver to build missiles, submarines, planes, etc. So they don't necessarily want the silver price to go up. But we're at the point where right now, as you know, India is importing a lot of silver. The LBMA is in technical defaults because they'd already told India that it had to, deliver the silver T plus 30, T plus 60. So China, we can move into the next topic, as you know, just again on November 1st, announced the Chinese Ministry of Commerce announced that silver and tungsten are going to be critical controlled minerals in China for export. Okay. So in the past, for silver, if you want to export silver, all you need to do is to do a report. Okay. You just report it to the Ministry of Commerce and you export it. But the new system for silver export in China is called review and quota. And in China, when they say review and quota, it's almost like they just really don't want you to export it. So, in my opinion, it's the first step to complete, banning or selective banning of the export of silver
Yeah,
out of China.
that
Yeah.
should be very bullish, I'd say. And also, you posted here recently the that the U.S. is kind of doing the same, but they allow COMEX to ship loads of silver to the LBMA, and then the Chinese banks they go to the LBMA and take the silver. Could you could you explain this little meme here that you posted?
Yeah. So basically, the US, a month, 2 months ago, declared that silver is a critical mineral. But then after they did that, of course, they need to follow up with a 232 analysis on silver's critical mineral status. So they declared it, but they need to do a 232 analysis to make sure that silver is in fact a critical mineral to remain on that list. So, um, according to Robert Gottlieb, that process has been delayed. Okay, Robert Goddard, by the way, again, he used to work at JP Morgan's Bullion Bank. He was an executive there, high level executive. And he has been waiting for the 232 analysis for silver's critical mineral status in the US for over a month now. We're still waiting. And he said that we're waiting. The results are not out yet, possibly because of the US government shutdown. Okay. So because of all that, as you just said, the COMEX is still shipping silver to the LBMA, right? Because there's no, you know, um, tariff on silver export from the US, and there's no export ban, so to speak, for silver to go to, the LBMA or anywhere else from the US as of right now. So that makes it a very interesting situation because China is, effectively closing that window with the new review and quota system for silver. But the US is still shipping the stuff to the LBMA, the silver, physical silver. And where's the LBMA shipping the silver to? It's shipping to China and India. So you see the irony of the whole situation is, unless the US stop this process, I think what's going to happen, Mario, is that India and China are going to empty the COMEX through the LBMA
Of silver, yeah.
of silver. Yeah,
Yeah,
of
yeah,
silver. Yeah.
yeah. And do you see also the gold market gravitating to the SGE and setting the price discovery for gold, uh, contrary to what we've had for like over 100 years, contrary to the LBMA setting that price? Is that what you see going forward?
It's possible, Mario, because China right now is in, a basically in deep talks with the Hong Kong government to set up offshore SGE contracts at the um, at the Hong Kong Gold Exchange. Okay, so we talked about that offshore vaulting in Hong Kong. And my analysis, my prediction is that they're going to use that offshore vaulting system. The first one in Hong Kong, maybe the next one in Dubai, Saudi Arabia, Thailand, Bangkok, New Delhi, Moscow, etc. So I'm just throwing names out there, but those are the offshore SGE vault potentials. So once they set up Hong Kong and they get it running, I think what's going to happen is they're going to use the gold that they parked at the Shanghai Futures Exchange. We talked about that. It's almost, I think, over 80 tons now. It's probably going to go to 100 tons, in my opinion. They're going to take that, and a lot of it probably, and put it in the Hong Kong SGEI, which is the Shanghai Gold Exchange International vault. And they are probably going to use that for international offshore trade collateral, or like I explained in the past, like interbanking repo collateral for liquidity.
Yeah,
So
no.
if they do that, have that going, and the SGE being the primary gold um, distribution center in China, like I said, because the VAT exemption is only at the SGE from this point on, then I think it's possible that the SGE, instead of being a semi-price taker, okay, where we are right now, is going to be a price setter for the price of physical gold going forward.
Yeah, and do you think it's just a coincidence, or do you think this decision in the first days of November, effective the first days of November, has got something to do with the meeting between President Trump and President Xi? Maybe the Chinese have gotten the nod from the Americans and they really want to push this de-dollarization, or maybe they didn't get the nod or they didn't get what they wanted from those negotiations. So they've decided we need to push this and accelerate the mo move towards gold and using it as a major reserve asset.
Maybe it's possible that he got a nod, and that at this stage of the game, it's beneficial to everybody that the gold price appreciates and get to something like $8,000 to $10,000 US dollars per troy ounce, like what Jamie Dimon of JP Morgan said recently. Because at that US dollar price of physical gold, the US government, like we discussed, I believe in one of our previous interviews, can tell the US Treasury departments to revalue is 8,133 metric tons of physical gold, and they can get $2.6 trillion from that revaluation, and that will effectively take care of more than the $2.16 trillion of long duration US Treasury bonds that the foreigners hold. Okay, they can repatriate that. So I think it, where I'm standing is, yes, Mario, it's beneficial for everybody that China is doing this at this stage of the game.
Yeah, yeah, and I think yeah, I'm grateful that you're such a good analyst of these things, and you're doing a great service for the precious metals community all around the world. I mean, for the viewers who don't know, Eric is actually based in Hong Kong. And I saw that one of the CTAs posted on X something to you saying, "Don't tell the foreigners what we're really doing. You're giving away our game." But I think you are an independent thinking person, and yeah, and I'm really grateful that you're doing this analysis.
No worries, Mario. If your audience want to see a detailed analysis of what's going on in China, they can always visit my X account at King Kong 9888. And I have, like, detailed analysis. I write up the explanation so they can just, watch the videos, reread, my explanation line by line until they understand what's going on.
That's right. And again, thank you, Eric, and I wish you all the best, and we'll keep in touch.
Thank you, Mario.